Hey, it's your friend Scott Bennett with Invest with Rules. I want to come to you quickly with the trend of the S&P 500 and then also share some ideas from our watch list with the hope and intention that it keeps you on the right side of the trend and helps you follow big money so you do better. That's the hope. Again, this is just information, not a direct solicitation to go buy or sell anything. Let's dive in with some ideas. So here's the chart of the S&P 500 SPY. This is an Invest with Rules trend roadmap script. What we're doing is we're looking, green is gas, so short-term, long-term uptrend. Yellow is coast, short-term is down, and the long-term is still up. That pink or red color is a short-term, long-term downtrend where that's where all the pain happens and all the trouble. And then after a very large pullback, you usually get some version of a U-turn where the short term is up and the long term is down. But we're trying really hard to invest in these green regions. And when it comes to the S&P 500, if you want daily for free with no catch on investwithrules.com, if you go sign up for free, you'll get our Invest with Rules S&P 500 specific tool. So here's the SPY on our indicator, and you could see how you had the tension in Iran and the conflict, and it pulled the market all the way down and actually brought it down from a gas to a coast to a break, so short-term and long-term downtrend. And you had your low on March 30th. This red downward facing arrow is, I think, check engine light, or there's something wrong. There's some downtrend confirmation, and then that all lifted. And on March 31st, we moved back to a coast. We got some confirmation signals that the trend was improving. You see these green triangles, and you got your first day of a gas signal on April 8th, and the market really hasn't looked back after that big gap up. So you had a couple of alerts that something was improving greatly. And now on April 21st, you have a market that had a more of a difficult kind of sideways choppy day. You're still in a short-term and long-term uptrend. We're still doing quite well from where we were. I'll draw the highs from more recently. Let's see, that looks great. So there's really a couple thoughts for you. So likely we maybe have some sort of consolidation pattern right here. I would say let's do that there. You're filling in some of the gap ups from below. So likely you chop around here, maybe at worst, at the moment, again, there's always worse, that's why you want to follow rules. Could you come down to that 695 where the tops were? But this is normal, and it's normal because you had this orange box, which we'll call overheat, where relative strength index exceeded 68, it went into the 70s, the market got a little hot. So you're just consolidating. I don't see anything wrong at the moment. You've come a long way from the bottom. But I think this is an interesting spot where the market maybe consolidates a little bit and chops around and consolidates after a really big run. Let's look at some ideas, and if we happen to own them, I'll certainly share that with you just in full and fair disclosure. We did add in our trend roadmap strategy, this is in both our newsletter and our advisory service, we added XHB, the Homebuilders. The Homebuilders is an ETF that owns Top Build, which just recently got bought out, Modine Manufacturing, Owens Corning, Train, Installed Building Products, and a whole bunch of other tickers, including DR Horton, which had a really strong day. Here is DHI. You can see that big gap up today on earnings. But here's XHB, the Home Builders Index. It's on a gas signal, short-term and long-term uptrend. That black dashed line is the 200-day simple moving average. You're now back above it. You're above the 50-day simple. You're above the 21-day exponential. And this is interesting because your risk reward profile is pretty sound, where the risk, I'll draw some fun lines for you. The risk to the 200 is less than 1%, to the 50 days 2%, and to the 21-day exponential is 4. But what if you got back up to your highs? You're looking at about a 12, 13% return if it does return back to its highs. So that type of risk profile is attractive to us, both also being following the trend. So it's in a short term and long term uptrend. So this is something where, again, you have kind of confirmation hearings for possible future Fed Chair Warsh and what do they do with interest rates. But the home builders segment has had a lot of trouble. You can see all the red arrows on coast and on break. And there is a kind of a regime change on April 2nd got the gap up with the market on April 8th on a U-turn, moved to gas, then kind of pause back to U-turn, and you're back. So there's definitely a kind of a turn in character where now you're forming higher lows and you're working your way up. I know today's a bit of a difficult day on some higher volume, but still looks attractive to us. Please manage and mind your risk. Next ticker on our watch list that doesn't have earnings in the next roughly 2 weeks, RBC Bearings in the industrial space. You're on a gas signal, not extended. And let's draw some pictures here. This is a normal consolidation after a nice big gap up. So came back up to the highs, consolidated one big shakeout that didn't fill the gap completely, but you're getting a lot of confirmation signals. We do own a position in this in our trend roadmap strategy. Again, we'll always manage risk if the trade moves against us, but this is an attractive item on our watch list. I'll share with you a biotech play, Praxis Precision Medicines. We own this in our fast lane strategy in our advisory service. So it had a huge gap up in December, worked its way higher. It's more volatile, it's a biotech, and it had a big consolidation just like everything else in the month of March. And now you're working your way up the right-hand side of the base, and you're getting more confirmation signals on a gas signal, so short-term and long-term uptrend. Definitely a more volatile stock being a biotech, but we own it, we're managing risk, and we think that there's a chance that you get your breakout. Again, there's always risk. There was number 3. Let's do a bonus one. Why not? Let's do on our watch list today. We do not own this as of this moment. Semiconductor tech name ASML. On a gas signal, we're getting confirmation. Let's do some fun lines. So you have, maybe some might say, more of a cup pattern. This might be more of a handle-like pattern. Let's draw a low cheat. We'll give I've read his great books, Mark Minervini, some great kudos. And you can kind of see how this could likely maybe break up and over this area of 1465, make its way to 1530, and then lo and behold, you might have a breakout. So again, these are all, when it comes to the stocks, RBC Bearings, Praxis, and ASML, these are stocks that the billion-dollar fund managers were accumulating, and the trend also favors. So think of it like a Venn diagram. So I hope this was helpful. I want to share with you the trend of the S&P 500. So far, so good, just in kind of consolidation mode. And then some ideas from our watch list. And we have a systematic process. So we've built systems to help us to identify tickers that are in uptrends, plus the billion-dollar funds are there. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.